Hey, what is up, guys? We have seen many indicators that promise to lead to another stock market crash. But why stock market continues to go up? Why it's not dropping? In this video, I will answer those questions, and additionally, I will talk about if we are in the financial bubble in the first place. Why stock market is not dropping? Nobody, and I mean nobody, can predict stock market consistently. No one has a crystal ball in front of them to tell you the future. If someone tells you they know for certainty where the stock market is going to be in the near future, I have a surprise for you. They are fucking lying. They probably have some other incentive, such as sell you some bullshit like their expert trading courses. If they would be such an expert, why do they need to sell you those classes to make money in the first place? Oh, that's right, because they cannot make money on trading. Look at 2008, some of the few people predicted 2008 housing bubble crisis. That is Peter Schiff. But guess what? He also predicted stock market crash in 2005, 2006, 2007, 2008, okay, 2008, he got it right, 2009, 2010, 2011, 2012, 2013, 2014, 2015, 2016, 2017, 2018, and now. So, what does that mean? It means that 1 out of 15 of his prediction came true. You would get much better success ratio from flipping a coin. Is stock market even currently overvalued? One of my favorite indicators is to look at the price to earning ratio. The average PE ratio since 1970s has been about 16.8. But during 2008 it was extreme. The PE ratio was triple digits, as high as 120s. In 1999, few months before the top of the tech bubble, the conventional PE ratio hit 34. It peaked close to 47 2 years after the market tapped out. Right now, current PE ratio of S&P 500 is about 20, meaning it is slightly higher than the average PE ratio since 1970s. But it's nowhere near where it was during the dot-com bubble in 2000s and the housing bubble in 2008. Are we in everything bubble? First and foremost, I would like to address this concern is there is such a thing as everything bubble. In 2000s, it was clear that investors were overhyped about new internet IPOs, which led to the dot-com bubble. In 2008, it was also clear that we were in a major housing bubble, especially when your dog is eligible for housing mortgage. But it's not so clear today, as many experts say that we are in a housing bubble, credit bubble, student loan bubble, debt bubble, and overall stock market bubble, and everything we combine to the huge everything bubble. So my question is it possible to be in many bubbles at the same time? Is there such a thing as everything bubble? Let me elaborate and give you an example. Suppose that if you want to invest in stocks and you're looking at a single indicator, let's say price to earning ratio, it means that PE ratio is very important indicator. But on other hand, if you're looking at 20 other indicators at the same time and they all become equally important, but if all 20 indicators are equally important, it means that none of them hold an important value. Therefore, the meaning of importance just dissolves and disappears. So, instead of one important indicator, you have nothing important left. The same idea with everything bubble can be applied. If we are in everything bubble, does this mean that we are in no bubble? Well, I don't know. I might be wrong. Let me know what you guys think in the comment section below. Similarly, if we look at the government-backed currency, we can apply similar idea. We know that every single government-backed paper currency throughout the history went to zero. But if we look at US dollar, how is it different than all those currencies that went to zero? It is the same damn paper that was used in thousands of other currencies which inverted to the true value of 0. But here is the difference with US dollar. The first time ever paper currency, which is US dollar, became global currency, which enhanced globalization. It allows to have free trade between countries around the world. Well, not all countries. So I have no doubt that Russian ruble will go to 0 eventually, but no one uses Russian ruble besides Russia. On the other hand, US dollar is different. It will go eventually to 0 also, but it will be much harder to surpass global currency than a single country used currency. So those are my thoughts and ideas why stock market and US dollar are not going down rapidly. Now let's look at some points why stock market will go down in the near future. We have been in the longest bull market in the history, 10 years since the last major stock market drop, which happened in 2008 housing bubble crash. S&P 500 dropped by more than 50% in 2008. Since then, we witnessed upward trend and stock market growth until the current date. We did have few hiccups on the way, which happened in 2016 and late 2018. In late 2018, entire stock market experienced a lot of volatility. It even tapped the bear market when leading indices such as S&P 500, Nasdaq, and Dow Jones dropped by more than 20% from its all-time high. Student loans. Student loans have seen almost 157% in accumulation growth over the last 11 years. By comparison, auto loans debt has grown 52%, while mortgage and credit card debt actually fell by 1%. That's a whopping $1.5 trillion in student loan out there, marking the second largest consumer debt segment in the country after mortgages. In 2008, $600 billion in student loans debt, and since then, it more than doubled. Interest rates. In the end of 2018, Fed raised interest rates up to 2.4%. There are 2 more interest rate hikes expected in this year. But what does this mean to stock market and overall economy? When interest rates are low, consumer saving decreases, therefore consumer spending increases, and it will stimulate economic growth, and when interest rates are high, the opposite effect will happen. Consumer saving will increase, meaning people will save their money and they will not spend it. Corollary to that, if there is no spending, businesses will have a hard time to generate adequate revenue. Consequently to that, economy will decrease. At 2000 and in 2008 crisis, Fed was able to save the day by dropping interest rates and stimulate another economic cycle. In 2000, they dropped interest rates from 6% all the way to 1%. And in 2008, Fed dropped interest rates from 5% all the way to 0%. But now, if we enter into the bear market, the dropping interest rates from 2.4% to 0% most likely will not be enough to stimulate another economic cycle, and therefore we may have witnessed the biggest economic crash in the history. Inverted yield curve. Yield curve graphs the relationship between bond yield and bond maturity. More specifically, the yield curve captures the risk of the bond with the various maturities to the bond investors. Economic recession occurs when the spread between 10-year and 1-year yield is less than 0. If you look carefully at the historical spread, you will notice that every time the spread between 10-year yield and 1-year yield goes below 0, we experienced a major recession, which happened in 2008, 2000, 1990, 1980, 1975, and 1970s. Every time when yield curve inverts, we noticed a major recession. Currently, we are very close to cross the red line, which most likely will lead to another recession. Another thing I wanted to mention about financial bubble is that if something is overpriced, it does not mean it will go down tomorrow. It's like when you go to doctor and your diet is shit, you eat standard American diet and a lot of fast food with full of sugars, doctor will diagnose you with the bad cholesterol and potentially diabetes. It does not mean that you are going to die tomorrow. But if you continue with that shit diet, you will drop dead soon. So what you have to do is to invert your diet, eat healthy food, drink water, then maybe you will live longer. The same goes with stock market. If Fed continues to take bad decisions about monetary policies, we will find ourselves in a deep hole. So going back to my question, if we are in the bubble or if we increase globalization, I would probably lean towards that we are in the financial bubble. But it does not mean that I would completely exit from the stock market, because I might be wrong. So we came to the end. Let me know what you guys think about the current situation in the stock market. Are we in the biggest bubble of all time, or globalization dissolves economic concerns? Leave your thoughts in the comment section below. If you enjoyed this video, hit that like button, and if you're new to this channel, do not forget to subscribe for more animated videos about financial market and cryptocurrencies. Other than that, thank you for watching and see you next video.